stock market today analysis for Wednesday, December 21st, 2022. Before we dive too deep into these stock charts, welcome to the I Have Success YouTube channel. It's part of the old I Have Success website. The mission of I Have Success is to help you begin your trading journey by learning how to sell cash-secured put options in a way that allows myself to grow and improve in the process. Why do I want to grow and improve in the process? Because if you want to master something, teach it. This is me. You can read about me if you feel like it. If you don't feel like it, no problem. But going back to selling cash-secured put options, so there's a couple different ways to potentially get started. The first thing would be go to ihavesuccess.com, download at the minimum the cash secured put stock selection guide. 3 stocks I sell cash secured put options on. These stocks are probably not suitable for you. They're suitable for me. And between these 2 guides, you should be able to help. It should be able to help you figure out how to make suitable decisions for yourself. I Have Success is not about a stock calling service. It's not about giving you anything other than it's about empowering you to make suitable decisions for yourself. Because I believe that if my fellow human being is empowered and you can make wise decisions for yourself, so you don't need to rely on the suspect opinion of other people, I believe overall I will live in a better world. So I want to help put you in that position. So download whatever of these suits your fancy. You'll be on a getting something like 6 days a week generally from me. And then also once you watch this video, right here at 2 minutes and 16 seconds, there's a link popping up, which is going to be like reasons why I think selling cash secured put options is a great strategy. It's not the only strategy I do. I don't think it's the one size. For most people, for a lot of people, it could be a one size fits all. Watch that video to get a better explanation. But for other people, like for myself, it's not the only strategy I'll ever use, but it's a bread and butter strategy. And then in the description of this video, there will be a link. It says like beginners playlist or something like that. So watch that first. Watch that playlist for beginners. It has 5 different videos in there. And between the downloads, between watching that video that was at 2 minutes and 16 seconds, and between that 5 video playlist, you should have a good idea of why you should learn how to sell cash secured put options, how to sell cash secured put options, how to set up some charts for you, and then you just have to pick a paper trading account and practice a little bit before you're ready to move on to the real deal. Speaking of the real deal, we're looking at overall general U.S. markets here. And this bottom row is the major stock market indices, and the VIX, which is a derivative of the SPX. It's kind of known as, has the reputation of being the fear meter. We see that the VIX is down today. So it looks like fear kind of a little bit less possibly today. And we see the overall SPX, Dow Jones, NASDAQ, Russell 2000, everything's up, green days. But let's note this. Out of these 1, 2, 3, 4 different indices comprising basically the whole stock market, 3 out of 4 are still under their 200-day moving averages. Only 1 is above the 200-day moving average, and it looks like it's struggling to stay above it. Right, bounced right here, tested it, kind of bounced back up. So let's see what happens when can it get up here into this kind of resistance. See where all these candles. It's not really like an exact line, but see this range right in here. We'll see what happens around there. That was at 335 into that maybe 340-ish area. Is it going to be able to get past that? And then what's going to happen at the 335? Because right now what I'm seeing is a top and another top. Now remember these little squares right here, these are only 1 month of information, each candle being 1 day. But overall looking bearish there. The dollar via the UUP index, dollar has broken below its 200-day moving average 1, 2, 3, 4, 5, 6, 7 trading days ago, and continues to be around there. Kind of gapped down yesterday, and seems like that 28 is acting as the new resistance for it. TLT, which is 20-year bonds, what's been happening with TLT for a while is kind of like whatever direction TLT was going, the stock market was also going. And in our limited 1-month snapshot view here, we see TLT had been going up and then dropped down a little bit, but from here to here, it's still up. Seems like this 102.50 area, right? You see prices right in here, kind of went sideways right in there. So looks like it could be a little bit of a supportish area, and also we got this kind of doji-ish candle, slowed down momentum when it started getting in that spot. Traded down there today, so opened here, traded all the way down here. We see the little skinny wick part, and then opened here, traded all the way down here, and then pushed up right into there. So let's see if it's gonna continue on kind of this uptrend. Look at that, getting near that 200-day moving average, and it seems like it's feeling some resistance there. Gold continues to just kind of float around this 200-day moving average, but after yesterday's big up candle, right? Look at this, today's candle, even though it's down at the moment, it's gold future, so it's going to keep trading much longer than the stock market. Look at how it's still in that top 10% of the candle, and this this place right here, whatever line that is, it's maybe that's 1824. I don't think it's 1824.50. Seems like they're all even numbers, but whatever that number is, it's getting covered up by the actual price. Whatever that is, seems that's a resistance zone right here. So if we can break above that and get let's see, get like maybe something like if you really want to be safe, you'd say over 1850. But what might happen is if it can get up here like high 1830s, 1840s, and start building, and this area ends up being support versus resistance, maybe it can build a momentum to go up. With these gold contracts, keep in mind there's this price can be pushed up or pushed down relatively easily because it's really just dealing with some paper shenanigans. It's not so much dealing with the actual physical metal. So for example, let's say you came in and sold, you short sold a lot of futures contracts. That would push the price down, but you don't necessarily have to have the physical gold to do that. You just dump a bunch of contracts onto the market. So just keep that in mind, that this is not, the point is that you can paper trade this price all you want, but just realize there's a difference between buying an ounce of gold at this price and the paper price of gold. You're probably not going to get an ounce of gold at this price. They're two different things when you really look at it with a microscope. Oil, one of my favorite things here. Seems like it's building this base around that $75 area, right? We see it touched here, it pivoted here, and then over here dropped down to the 70, came up, and then slowed down right around that 75. But boom, let's see what happens when it gets right up here to this 80 area. Bitcoin continuing to do what Bitcoin does. Granted, this is Bitcoin future. Kind of go sideways, rally up, break down. So I'm expecting sooner or later, yeah. It was up here, now it's testing the 16 again. I'm expecting it to keep testing. Probably, I'm sure we could probably see this 15,000s again. So we took a look at the big markets. Let's take a really quick look. Go through the speed round of the 11 major sectors of the stock market. XLK technology, below that 200-day moving average. Look at the slope of that. Right? Even though it's rallying up, right? Look, it's got to get through this 130-ish until it hits this 130-ish. It's got to get through that resistance right there before it's getting up there. So just because we got an up day, I want to get all excited. Don't listen to Jim Cramer and get all excited about that. You got to get through that. You got to get through this 130 to 135 area, and you got to get over the 200-day. Look what happened last time I was up there. Boom, sold off. Healthcare. This one was quite bullish for a while, but it really pulled back. But look where it's at in relationship to that 200-day moving average. 200 days, 20 trading days per month. We're at about looking at about 10 months of trading information there. So it's been on an upslope, which we saw here. And in this month-long trend that we've seen, it broke that month-long whatever data we're seeing here. It definitely broke the uptrend. Basically, yesterday it was basically sideways, right, from here to here, and just bounced up just a little bit. But let's look, when we continue to go through here, let's look at how many stocks are below their 200-day average, or where they are in relationship to their 200-day average, right? So this one is above the 200-day moving average with the average kind of sloping up. Financials below the 200-day moving average, rallying, trying to rally back up to it. We'll see how it's going to go. Look at that, sloping down. Industrials, look at that flat 200-day moving average above it. And we see why it's flat. It's basically going sideways, broke down a little bit here. So it was kind of in the sideways trend, and broke down just a little bit. Maybe if we were looking at a year's worth of data, maybe we'd see overall it's still in its sideways trend. Basic materials, well, we got, you know, it's sort of a flat, kind of sloping down. It's definitely not as sideways as this one, but sloping down there a tad bit, and it's broken below. I'm testing that 200-day. Energy on top of that 200-day moving average, and it's on an upslope. But we see over the last month, energy has really been going down, and it had this little pivot here, and now we got a little pivot here. It's coming back up to test that, and not looking too strong around that 87.50 area. We'll see how that goes. Consumer discretionary, look at that, downward sloping 200-day. It's not even close to it, it's just falling apart here. You know, if you like the idea of selling cash secured put options on stocks that you might not mind owning the rest of your life, and you implement all those resources I told you about in the beginning of the video, you might look for really good values in this area. But you gotta make sure you're implementing that put stock selection guide stuff. Don't buy some, you wanna, if you do this, you want to have stocks that are going to be around for like the rest of your life. You don't want to be buying a Blockbuster. You don't want to be doing an Enron. So nowadays you don't want to be doing an FTX. Consumer staples, right, above that 200-day, but it's just kind of moving flat. And we see it kind of rallied up and went sideways for a little while, really broke down and hit that 200-day, and boom, got some support off it. But look here, having some trouble right basically where it started. Opened the month here, not the month, but the 30 days of trading. Opened right here, and we're kind of right sideways with that, which isn't surprising when you see the sideways 200-day moving average. Speaking of sideways 200-day moving average, we almost have one here on utilities, sloping up just a little bit, which we see reflected here. Whoop, right? Up just a little bit. Tested that 200-day, failed, went sideways, tested again, failed. And with real estate below the downward sloping 200-day moving average, and really just fell apart like everything else lately, trying to bounce back up, but these candles are not looking very vibrant on the upside. And with the retail, downward sloping 200-day, and it just kind of fell apart. So we got, where's our strong uptrend moving averages? Okay, maybe let's say this is one and this is one. So we got 2 out of 11, right? That doesn't seem very, very bullish, right? How about downward sloping? 1, 2, 3, 4, 5. 5 out of 11 sectors got a 200-day moving average that's obviously downward sloping. How about sideways? 1, 2, 3, 4. So 4 out of 11 sideways. So the bull case isn't very strong just by looking at quick quick view of moving averages out of 11, the 200-day moving average out of 11 different sectors, right? Only 2 out of 11 are showing bullishness. Everything else is showing sideways to bearishness. And you know, the bear can really be weighting down those sideways ones. And going back to looking at specifically the you know, all those different sectors come into this S&P 500. And this line chart here we see at basically the beginning of this year, really the end of last year, beginning of this year, we entered this bear market. And you got this little channel drawn here. And right now we're testing that top part of the channel, right? Right now, just basically it tested right here, bounced up, but let's see if it's going to go continue to stay on the top side of this. And I'm like, the stock market can only go 3 ways: up, down, sideways. Up is my least likely opinion. Sideways is probably my most likely opinion, and that seems to be sideways somewhere between like this 380 to, let's say, 380 to 400, 407, somewhere in there, with a little wider range, all the way down to this 360-ish area, up until somewhere in here in the 420s. Now, if you find that, you know, comical, you like the number 420, we got to balance this out for other people. So other people, they like this number, right? What number is that? 357. So, you know, maybe you like both numbers. I don't know. Me personally, I'm a kind of guy that can stand behind 357. And the reason why I prefer to stand behind 357, because I don't know anyone who wants to stand in front of one. Yuck, yuck, yuck. You like that joke? So that's what I see kind of going on. Now, I think that if the Federal Reserve, the Treasury, the plunger team, if they really, mainly if they come up with some sort of program that is, maybe it's called quantitative easing, maybe it's called Operation Twist, maybe they call it Operation Jump Stop, maybe they call it Silver 123, maybe they call it Blue 456, whatever they call it, it doesn't matter. If it somehow is making easy money and that money is flowing into equities and it causes this to happen, which is basically what happened right here, then yeah, we'll see a bear market. But without that happening, I don't see a bear market really screaming through, because where is the great fundamentals of society right now? How about war in Ukraine, U.S. sending over money to, you know, fund the war, potentially having troops on the ground? Is that good for consumers? Is that good for people going out feeling like we're in a great, you know, economy? Yeah, maybe it's good for the aero defense sector, Raytheon stock, but is that good for, like, I don't know, Target? You know? So, and look at kind of the political divide that we see in the United States right now. Oh, you know, that's like, there's all that stuff. So, my point is, if you just really look at that stuff, there's like, you have to really rationalize, justify, and sort of be in denial. And if you want to say, like, no, the economy is really great, and it's okay that it's not. Like, to me personally, if it's, you know, I just want to call a spade a spade. So I think the only way the stock market is going to be going up is with some financial engineering on the part of the powers that be. And I think that sideways could likely happen. And I think that if it drops, if it starts breaking past this this 360 area, specifically that 357, then we might be in for a bit more of a drop. But even if it gets down here, look where it's at. It's back in this trend. It's back in this channel, right? So if it's just like, it could grind sideways this way, right? Because every day is going by, could grind sideways this way. But if it breaks this, it's like, it's going in here. It's going, if it really breaks it, it could just kind of, could do like this. But if it goes back in this channel. We'll see. With that, we'll take one last really quick look at something just in case it might be of interest to you. Let me draw your attention to this one right here. These are all interest rates and ETFs that are 4 different ETFs that are related to interest rates. And right here, what we have is this green line is the 10-year treasury rate, and this purple line is the SPX. We're using the SPX as a proxy for the overall stock market. So in the big picture, what have we seen going on? And how much information is this? 1 year from left to right. So in 1 year, 10-year rates have gone up, and in 1 year, the stock market has gone down. And generally speaking, that's what's been going on. Look at this correlation right here. Up, down. That little caveat right here. And lately, this is probably going to be somewhere here, right here. I'm guessing this is around 357. This is probably 380-ish, somewhere in there. So, what else? What was the current 30-year is at about 3.62, 10-year about 3.57. When people talk about this inversion of the yield curve, it flashes, it's giving an indication of recession. And we live in a day and age where people are redefining terms and all this stuff. And for like 30 years, there was a standard definition of recession. And then maybe like 6 months back, the president and all these political people came out and said that's not the definition. So regardless of what word you want to put in there, generally speaking, and more importantly, if you're going to be selling cash secured put options, how can you use this particular information, right? So this is signaling, this is basically saying that for 30 years, to risk your money for 30 years, you're going to get paid less than to risk your money for 1 year. Now 1 year seems like it's less time, seems like it's less risk, right? 30 years versus 1 year. So that is kind of an indication that people that invest in these bonds and treasuries, they're not confident with what's going to happen in the future. And it has signaled throughout history, like kind of consistently. I don't know the certain statistic or whatever, feel free to look it up. But generally when this is happening, which is called the inversion in the yield curve, the closer duration, shorter term yield being higher than longer term yields, generally indicated economic distress, or not good things going economically, not going well forward. And when we take that information and we're looking at these different sectors, and we see the majority of these sectors are sloping down on the 200-day moving average. At the minimum, the next most amount we got going sideways, and we only got 2 being bullish. And we look at these 4 indices that basically, between these 4, that's like pretty much everything in the stock market. And only one of those 4 is above the moving average, and that is a sideways average. Like there's nothing going up for based on just a quick look of what's been happening in the past. This 200-day moving average is not easy to get above. So if you are looking to how to use this information, one, if you're selling cash secured put options on stocks that you don't mind owning, like I am, a time to particularly sell is, for example, like doesn't matter what stock it is. If you just kind of watching this chart here, when they're moving down like this is a good time to sell, because you can get further away from the money. When it's going up like this, you can't get as far away from the money, because you could be the same. You can't get as low of a price, right? Let's say instead of 330, let's just say this is 30, 35, 40, right? Down here, right, when it's down here, maybe you could sell an option maybe at $20 and get paid some decent premium for it. which would give you the commitment to buy 100 shares of whatever stock at $20, and you're getting paid to write that insurance policy. But up here, maybe you can't get as far as $20 away. Maybe you're into like, I don't know, 28 or something like that. So you can potentially get a better purchase price. And if you don't know, if you can't really read these charts and not really sure what that's telling you, for some reason, just the further away you sell, the lower strike price you sell, probably the better if there's a chance that we'll see a drop in the stock market. Keep watching these videos. The main thing, paper trade. Get yourself a paper trading account. Practice. You probably want it, if you wanted to learn how to box, you probably want to step in the ring with Manny Pacquiao as your first day of boxing to learn. You probably want to be in a real fight against a professional. Well, did you know that professionals trade in the stock market? Have you heard of Warren Buffett? He's in the same stock market that you are. You want to go against Warren Buffett? If you say, no, I don't want to go against Warren Buffett, well, you don't have a choice. You're in the stock market, you don't know who you're against. You're against the amateurs, you're against the professionals, you're against everybody. So why not do some simulated trading so you at least know what buttons to press in order to make a, if you're like, hey, I want to buy the stock, make sure you know what buttons you're pressing. If you're going to make some silly mistakes, make them in a paper trading account. With that, ladies and gentlemen, I got to take care of some stuff. You guys have a fantastic day. Aloha.